I woke up tomorrow and found out I owed the IRS $100,000. I would not give them a call. I would not drain my retirement account. I would not borrow money from family. And I definitely wouldn't hire the first tax relief company that popped up on Google. Instead, I'd follow the same exact process I use for my own clients every day. Today, I'm going to walk you through it. I'm Brad Paladini, a tax attorney and founder of Paladini Law. My team and I help individuals and business owners resolve IRS tax debt every single day. And while every case is different, the process I use to evaluate a tax debt case is remarkably consistent. Whether someone owes $1.5 million or $15,000, I don't start by looking for a solution. I start by understanding the problem. Because if you skip that step, you can easily spend thousands of dollars pursuing the wrong strategy. Here's the first thing most people do when they find out they owe the IRS. They panic Google a number. They glance at the last notice that came in the mail and assume that's the full picture. Or they go off a number they remember from months ago and just run with it. Here's the problem. The number is almost always never the real problem. Penalties have been accruing, interest has been compounding, maybe a tax return got adjusted, maybe a payment got applied for the wrong year. So before I did anything else, I'd stop guessing. I'd pull my actual IRS account transcripts. I'd verify every tax year. I'd confirm the real balances. I'd look at penalties, interest, collection status, because every decision that comes after this one, every strategy, option, every dollar you consider spending, depends on knowing the real number first. Guess wrong here and everything downstream is built on sand. Here's what most people don't realize. Many IRS resolution options require you to be compliant first. That generally means filing all required tax returns. So before I worried about payment plans or offers in compromise or penalty relief, I'd make sure every required return was filed. Because until you become compliant, many of the best options simply aren't available. Next, the step that most people skip, and it's the most important. Before I even think about resolving the debt, I'd figure out why it happened. Was it not enough withholding from a W-2 job? Was it underpaying estimated taxes as a business owner or self-employed individual? Was it a one-time event like a large capital gain, retirement withdrawal, or business sale? Or was it a pattern of underpayment over multiple years? Because the truth is, if you don't fix the reason the tax debt happened, you're very likely to end up back in the same situation again. So I take a hard look at my current tax setup and make adjustments immediately. That might mean increasing paycheck withholding. It might mean setting up or adjusting quarterly estimated tax payments. It might mean working with a CPA to project income more accurately going forward. The goal isn't just to resolve the IRS balance. It's to make sure I don't create a new one next year. Next, I'd figure out where I'm at in the IRS process. This is where I think most taxpayers go wrong. They focus on how much they owe, and I get why. That number is the first thing you see. It's on the notice. It's the thing that keeps you up at night. It's what you say out loud when you finally tell your spouse or your business partner or nobody because you're too embarrassed. 60,000, 140,000, 300,000. The number becomes the whole story. It feels like the size of the problem. So it feels like the thing you need to fix. But the balance is just a snapshot. It doesn't tell you if the IRS is quietly sending notices you can still ignore for a few weeks, or if they've already filed a lien, or if a revenue officer has been assigned to your case and is actively building a file, or if you're one step away from a levy. Because risk isn't just a feeling, it's specific. It's whether your bank account could be frozen next week or next year. It's whether your wages are about to be garnished before your next paycheck even hits. It's whether a lien is about to show up and complicate refinancing or selling your house. It's whether your passport could be affected because the debt has crossed a certain threshold. True people can owe the exact same amount and be facing completely different versions of that list. One might be months away from any of it. The other might be one letter away from all of it. So I focus on what the IRS is doing, not because the number doesn't matter, but because the number tells you the size of the debt. Where you are in the process tells you which of those risks are actually on the table and how much time you have before they become real. Next, I'd protect my cash until I had a strategy. This is a mistake I see all the time. People panic. They cash out retirement accounts, sell investments, take out high interest loans, or refinance their home. Sometimes they don't need to. Now, I'm not saying those are never the right decisions. Sometimes they absolutely are. But I'd never make those decisions until I understood all of the options. Because once you've withdrawn your retirement funds or sold assets, you usually can't undo it. A strategy should come before the check, not after. Next, I'd analyze every resolution option. Only after I understood my case would I start evaluating solutions. Could an installment agreement solve the problem? Would penalty abatement significantly reduce the balance? Would currently non-collectible status be appropriate? Would an offer in compromise realistically work? Notice something. I'm not asking which option sounds best. I'm asking which option actually fits the facts. Because the IRS doesn't care which program you like. It cares which program you qualify for. Let me give you an example. A taxpayer came to us owing just over $140,000. Before calling our office, they were preparing to withdraw a large portion of their retirement savings to pay the IRS immediately. They were terrified of losing everything. After reviewing the case, we discovered something important. The IRS wasn't actively levying assets. The taxpayer was fully employed. They were compliant, and they qualified for a payment arrangement that allowed them to resolve the debt over time. Instead of triggering taxes and penalties by cashing out retirement accounts, they kept those funds invested and resolved the IRS debt through a structured plan. The point isn't that payment plans are always the answer. The point is they almost made a permanent financial decision before understanding the problem. That's exactly what I would avoid. There are also a few things I definitely would not do. I wouldn't ignore IRS notices. I wouldn't assume every tax relief advertisement applies to me. I wouldn't promise myself I would deal with it next month. And I wouldn't assume the IRS is my enemy. That last one surprises people. The IRS has a process. There are rules. There are deadlines. There are programs. The key is understanding how to work within that system instead of reacting emotionally. People sometimes ask, what separates experienced tax professionals from everyone else? The answer is simple. We don't immediately think about solutions. We think about diagnosis. Just like a physician doesn't prescribe medication before understanding what's wrong, a tax attorney shouldn't recommend an offer in compromise, payment plan, or any other strategy before understanding the facts. Good decisions come from good information. That's true in medicine, it's true in law, and it's certainly true with the IRS. So if I owed the IRS tomorrow, here's my checklist. First, find out exactly what I owe. Second, get compliant by filing every required return. Third, understand why I owe the IRS and fix the underlying cause. Fourth, determine exactly where I am in the IRS collection process. Fifth, protect my assets until I understand my options. And sixth, choose the resolution strategy that fits my financial situation. Not one that sounds the most appealing. That's the exact framework I would use. And it's the same framework we use with our clients every day. The biggest mistake people make isn't owing the IRS money. It's making emotional decisions before they understand their situation. Fear causes people to rush. The IRS process rewards people who slow down, gather information, and make strategic decisions. I owe the IRS tomorrow. That's exactly what I do. Not because it's the fastest path, because it's usually the smartest one. If you owe the IRS, don't start with a solution. Start with understanding your case. We offer consultations to review your account and build a strategy before you make expensive decisions. Subscribe for more IRS tax problems, audits, and resolution strategy videos.